Imagine buying a token at 7 cents, going to sleep, and waking up to a 364% gain in a single day. That is exactly what LAB did in early 2026. That massive momentum pushed the project's market cap to nearly $400 million in a matter of weeks. The entire crypto space took notice fast, but we need to figure out if there is actual substance here or if we are just looking at a fragile hype bubble. At its core, LAB is an AI-powered multi-chain trading infrastructure token. Its flagship product is the LAB Terminal. This is a platform designed to handle spot trading, limit orders, and perpetual contracts across networks like the BNB chain. Led by founder Vova Sadkov, the project is positioning itself directly at the intersection of AI and decentralized finance. AI and DeFi are the two most aggressive narratives in the market right now. Combine them and you get extreme valuations. That before putting a single dollar into a project riding on heavy buzzwords, a forensic look at its actual utility is mandatory. Most traders lose their edge to friction. You bounce between one app for charting, another for the actual trading, and a separate platform for research. It is messy and it slows you down. LAB is attempting to fix this scattered workflow. They are building a unified ecosystem that brings analytics, asset management, and trading tools into one connected space. The intelligence layer powering this all-in-one trading cockpit is a proprietary AI research engine built to actively scan the market and deliver actionable trading strategies directly to the user. If the development team can genuinely deliver on this unified vision, the hype makes sense. But if that AI engine turns out to be a marketing gimmick, the foundational thesis for holding the token collapses. Let's look at the balance sheet. LAB has a strictly capped total supply of 1 billion tokens. But only a tiny fraction of that supply is actually out in the wild. Right now, there are roughly 77 to 210 million tokens in circulation. This chart shows exactly why that matters. The modest bar you see represents the current market cap of $388 million. Next to it is a towering bar representing the fully diluted valuation, which sits at over $5 billion. Fully diluted valuation represents what the market cap would be if every single token existed right now. That massive gap means heavy blocks of future token unlocks are waiting to flood the market, which creates severe downward pressure on the price. The development team is highly aware of this dynamic. To defend the price against that inflation, they implemented a token burn mechanism to permanently remove supply. They are also aggressively buying their own token off the open market. In October 2025, the team executed a major buyback, repurchasing over 20.9 million tokens for approximately $2.35 million. Multi-million-dollar buybacks show strong financial commitment from the creators. Still, overcoming a $5 billion valuation gap makes holding LAB a dangerous race against impending inflation. Big price action has fueled a massive, highly vocal community around the project, but there is a serious red flag in the on-chain data that we have to talk about. The prominent on-chain investigator Zach XBT publicly accused the founder of manipulating centralized exchange volumes. Immediately following those public accusations, a highly suspicious $14 million token transfer moved out of a project wallet. So far, the team has completely ignored the situation. On the competitive front, LAB is fighting an uphill battle against giants. People frequently compare it to Hyperliquid, but Hyperliquid is deeply established and already processes billions in daily volume. LAB is much younger and smaller. Its only viable path to stealing market share relies entirely on proving its AI engine is actually superior and successfully rolling out a mobile app to capture retail users. For those looking at the logistics, the token trades on centralized platforms like Bitget, MEXC, and Binance Alpha, as well as decentralized exchanges like PancakeSwap. If you use a DEX, verify the official contract address first. Stepping into this trade means you are actively choosing to bet on an underdog technology while simultaneously turning a blind eye to severe, unresolved security allegations. Let's map this volatility. The line plots LAB launching from an absolute floor of 7 cents, ripping to a $6.70 peak. Now consolidating, bulls require a definitive close above $2.05 to trigger a run toward the 250 target. Breaking that technical resistance requires momentum, and the two fundamental catalysts to watch are the upcoming mobile app release and continued on-chain token buybacks. The bull case is clear. LAB delivers genuine AI utility, multi-chain functionality, and heavy trading volume backed by a team actively buying up supply. The bear case is equally stark. The project is haunted by massive unlock pressure and the dark shadow of unresolved market manipulation allegations. Ultimately, LAB is a high-risk, high-reward play. It requires intense, active portfolio management. Remember, this analysis is for educational purposes only. It is not financial advice, and capital should never be risked blindly. Always conduct your own research. LAB may be the most talked about AI token of the year, but hype is not an investment strategy. If this audit helped you cut through the noise, hit that like button and subscribe.